Good morning and welcome to the first episode of Metaplanet Roundtable. A big shout out, of course, to Climb That Ladder for doing an amazing world-class level of data crunching and analysis on Metaplanet. I think he's the reason that a lot of us are here owning Metaplanet today, starting like 3-4 weeks ago, when the MNAV of Metaplanet really became attractive. It was below 3, and I love those Saturday shows. And then I've been looking at there's a lot of accounts that have really good signal on Metaplanet, and I'm trying to get them together to do a fixed Tuesday 9 a.m. Pacific time show called Metaplanet Roundtable, where we just informally and with a bit of banter and shooting the shoot are gonna talk Metaplanet and thoughts that come to mind in an organic conversation. There might be a few topics we want to cover, and today we're gonna probably cover stuff like what makes each of us individually bullish on Metaplanet. The current BDC yield that they're performing, is that something that we believe they'll be able to continue? And talk about Metaplanet versus the other LBEs. Now, there's more than just one leveraged Bitcoin equity out there. Do we see people moving funds between them as something that is starting to play out? And also just the experience in Vegas. I'd love to welcome a good friend of mine that I've enjoyed his content for a year or so. One of the original quant bros, RyQuant. Love you, brother. Good to see you here, and thanks for checking in today and being here, man. How you doing?
Yeah, man, thanks for having me. I got to go through the basics here. Hopefully this is like riding a bike and I haven't lost the mojo from when I used to do podcasts and live streams and that stuff. But yeah, thanks for reaching out. I'm happy to be here.
Yeah, no, I'm really happy that I managed to get you back on stream, man. You're loved by many, and I would say, if anything, any areas that you feel where people are sucking energy out of you or whatever, you just move on, like just block, move on, whatever, man, and focus on the good people, the good signal, and the conversations that you enjoy to have, and the rest just honestly, just out to the side. Also, Brian, welcome here. Brian is one of the accounts on X that, after I got into Metaplanet myself, I'm not sure if it's 3 or 4 weeks ago, but Brian is putting a lot of really great signal there and on X, and I'm really enjoying his post and analysis. So that's why Brian is here as well. Brian, welcome. Good to see you, and thanks for being here, brother.
Yeah, thanks for having me on the show. Yeah, also shout out to Climb That Ladder. I've been paying attention to Metaplanet since the very beginning. Ever since I heard that they were launching a new one in Japan with Dylan LeClaire, thought this is very interesting. Been tracking the price since it was 40 yen, but was not able to popularize it quite as successfully as Climb That Ladder was. So big shout out to him. And just, I'm super excited that more people are interested in Metaplanet and talking about it. And, happy to be here today to talk more about it.
That's awesome. I've gotten this comment several times, and not only is English my second language, it's like, that's just, I think, how I speak, and it's hard for me to cut it out. It becomes all like I'm not speaking like naturally flowing anymore. So I apologize for saying but I try to cut it out. I can't, my bad. It is what it is. Yeah, Brian, you're touching on something I think all of us noticed when Metaplanet came on stage. I mean, on the LB stage, April last year. It seems like such a long time ago. It's just a year and 2 months, right? But they're actually the second longest running track record now for leveraged Bitcoin equities, and a lot of us saw it I think back then unable to buy Japanese stocks. That changed at the end of November, where they listed also in US with the ticker symbol MTPLF. But also the MNAV was really high, so I think a lot of us stayed away, and I think that's where Klein picked up how he kept an eye on it and let everyone know that he bought like a few million shares because now MNAV was around 2.5. What's your thoughts on that process or period of time?
Yeah, sure. I think it was a very different proposition a year ago. And the way I look at it is that even though these are publicly traded companies, a year ago, buying Metaplanet was more like buying into a Series A startup. And now it's more like buying into a Series D startup. So it's got a lot more escape velocity than it had back then. So I think it needed time just to establish a track record. Also, a lot of people, they're just not comfortable buying international stocks, as you pointed out. Even though it was accessible, you could go on to Interactive Brokers and buy the Japanese listing. A lot of people either didn't know, it was too complicated, or were just a little bit intimidated by it. Even today, I talk to people who are still not quite comfortable with the OTC ticker, but I think we're getting over that hurdle. And overall, it's just it's been an incredible ride. The volatility today is almost the same as it was when they first started. So it's been a lot of fun.
Yeah, it has been, definitely has been. Ryan, what's your thoughts on this journey of Metaplanet starting the Treasury strategy, being in Japan, unavailable, and here we are?
Yeah, so I think what Brian said there, that really resonates with me. I think I had always been and I've only been in markets for about 7 years, so it's not like I have like a lifetime of experience or anything, but I've always been very US focused because I'm a US based person, and also because, the world reserve currency is here. The interest rate, kind of the dictating force of interest rates, seems to be in the US. The power, like this really seems to be like ground zero of world financial markets. So I guess that's why I was always sucked into US markets. So then last year, when Metaplanet had hit the scene, I just really didn't know what I didn't know. As my dad always says, I just don't know how equities in Japan function. I didn't know what the investor dynamics would be. So because of that, I spent most of 2024 feeling like an idiot for not owning any of this thing. I did get a little bit at the tail end of the summer in the 3350 ticker in Interactive Brokers, which in and of itself was very hard to get, like almost so much so that it limited how much I was going to actually like buy. So then once the ADR, which is the American depository, I think ADR stands for like depository record or something like that. It's just the US version ticker symbol. Once that came to market and it was available at all the major brokerages, it was much easier to access. But yeah, so there was a couple things that I didn't see right away that I did see in the months to come that really changed my perspective. The first, or actually the last in order, but the biggest of the things, was just seeing the room filled at the Metaplanet annual conference. Packed to the gills. And I was comparing that to MicroStrategy World last year, because one of us, at least I would have thought that would have a bigger turnout, right? With Saylor as being like the world's most recognizable Bitcoin bull, the biggest US-based company. And I'll tell you, there was only like 30 of us there as like true MicroStrategy Bitcoin focused investors. Most of the conference at last year was still about the software business and everything else in terms of the number of turnouts of people. So once I saw that room was packed to the gills, that was really the final cherry on top. But a couple other things. This seems to be the most tax efficient way for investors in Japan to get Bitcoin access. There's something grotesque on the order of 50 to 55% capital gains on cold storage Bitcoin. It seems like there are not too many alternatives, such as spot Bitcoin ETFs, either local or in the US. And another thing about the Japanese base, well, the first is that it's the second largest equity markets in the world. So this is a very, very much developed nation, very much with active investors. And the interpretation I have is that they kind of want to buy local. hold the local assets, which again, I may be wrong on that. I'm kind of speculating, but yeah, after seeing this body of work, and just, it doesn't take long to realize that this is a very high velocity version of MicroStrategy, and it also benefits from the base effect math of starting at such a low starting point. So I put all that into a cake, and that's why I'm here.
I'm here for that cake. That cake where it's doing everything that strategy is doing close to. I will talk about that, the preferreds, which they're not doing yet. But the key, I think, the beauty here is the high velocity that they're doing at. The BTC yield that they're creating is really something else. And the only one with a track record of a full 1 year and 2 months. Imagine we're in an industry, looking at an industry where a company that's been around forever has been here doing it for 1 year and 2 months. These are truly exciting, fun times. Brian, do you have some thoughts on some of those things Ryan there touched upon, or anything you want to add?
Right. I think among the international LBs that are launching right now, Metaplanet's very compelling for that reason, because you've got structural interest rate advantage. You've got, that the capital gains tax differential. The local advantage that Ryan was just mentioning is absolutely true. One thing a lot of people don't know about me is that I lived in Japan for a couple of years, and so I was on the other side of some of these trades. I used to live in Japan, trying to be awake at night to trade the U.S. market. So I'm very happy that other people are being introduced to this way of life. So, but yeah, when you add it all up, and also the team are fantastic. Dylan and Simon are absolutely amazing. And another thing I think they've done that doesn't get enough credit is that a lot of the things that we see people complaining about strategy, either rightly or wrongly, they are capitalizing on with the way that they're promoting themselves. With the way the moving strike warrants are structured, they only sell on up days. So whenever there's a down day, they can't say, "Oh, well, they're smashing the warrants," because they aren't, and they can't, and they can't. And also recently, they've been talking about convertible bonds. One of the things that always happens during a convertible bond issue is that the price just gets smashed on the common when the convert buyers hedge their positions. And Simon says, you know what, if we're going to do convertible bonds, we want to get long-only investors. And one of the things that could enable that is that they're at a size where they can pick and choose who invests in those bonds more than they can if they were trying to do, say, a $3 billion issue like Strategy can. So very bullish on all the structural factors, the team, and their strategy.
Yeah, I think so. You touch upon something I think is really crucial, or I guess it's hard to say how big a part of Metaplanet's success it is, but it certainly helps. And that is the fact that in Japan, you can invest in Bitcoin two ways. One of them is spot BTC. Correct me if I'm wrong on some of these. Is the spot BTC, but that is taxed much more aggressively than buying Metaplanet in a NISA account, like a tax advantage investment account. And that's why this is just the way more tax efficient way to own Bitcoin exposure in Japan. And it's definitely helping. Ryan, yeah, please. So you shot me there and a internal question there, or a comment. Please go ahead and let's talk about the bonds and how they would differ from MSTR bonds and the strike bonds and all of that. Would love to hear about that from you. I can't hear Ryan right now. Did you mute yourself?
Yes. Yeah, so the timing of life, we actually have a gentleman fixing our dryer right now. So there might be some background noise, and I'll do the best I can to pass it off here in a second. But yeah, that was really more so phrased in the form of a question. And I hope I'm giving Brian a little bit of time here to think through the answer. But he touched on so there's two things, right? There's ATMs for MicroStrategy. That seems to be the moving strike warrants for Metaplanet. And there's also a bond component here. In the short abbreviated version, I've seen Dylan LeClaire post, it'll just be a couple words. It'll be like selling bonds, buying Bitcoin. But I just haven't looked in to see like what are the nuanced differences between both those two ways of raising funds in order to buy more Bitcoin.
Yeah, sure. The bonds they're doing are ordinary bonds. They're not the convertible bonds that we've seen from Strategy. They're not quite there with the convertible bonds yet. And the bonds they're issuing are actually done by the same partner EVO fund who executes most, if not all, of the moving strike warrants. And so basically what they've been able to do, partly aided by low interest rates in the Japanese market, partly aided by the fact that Simon, I believe, used to run EVO fund, so it's a very tight relationship. They've been getting these 0% ordinary bonds and basically pulling forward some of their Bitcoin purchasing power while prices are low, and then being able to pay that off over time by executing the moving strike warrants.
But these bonds, Brian, aren't they 0% bonds? And as I read it, there's no upside. This is not like a convert. Is it not just lending the money and not getting any return, but just getting the same money back half a year later? Like, why would people do that?
Yeah, I believe that it's just straight bonds. It's definitely not a convertible. They do not convert to shares. The pricing, I'm not sure if they're getting a discount on that or not. They might not be. If someone else can clarify that. I haven't been able to find the exact terms. But I think that really what's in it for them is that they are the same fund that's executing moving strike warrants. And so they're profiting on those. And so, they're more incentivized to give a little bit more favorable terms on these bonds because they're making money on the moving strike warrant side of things.
Right, but I mean the way I'm reading it, and therefore it must be wrong. And please help me understand. The way I'm reading it, these bonds, there is zero upside to the bond buyer. They just lend out the money for half a year, and then they get it back half a year later. There's no interest rate. There's no. I gotta be wrong on that, right? No one would. Why would you give your money away for half a year and just receive it back?
Well, I think it's right. There is. There's no coupon on it. They're not getting paid interest. It's just, they get the money back they put into the bond. And like I was saying, I think it's just a function of them making their money on these moving strike warrants. And, and that's the way the deal is packaged.
Right. Okay. So then it's that's the company making money on selling those are the ones lending them money, basically.
Yeah. The same people who are buying the bonds or the company is the same fund that is executing moving strike warrants. It's the EVO fund.
Interesting. What, do you have any thoughts on that, Ryan, or any comments?
Well, I was thinking the same line of questioning that you were, right? It's like, okay, what would be the incentive to just lend out the money for free? And a couple things come to mind. One of Saftein's books, I think it was Bitcoin Standard or Fiat Standard. It might have been Principles of Economics too. But one of his books talked about in very low interest rate countries, it can be quite, especially countries that are bordering on negative interest rates, it can be common to loan people money for 0% because at least you'll get the same nominal dollars back too. But also perhaps more so what this seems like is EVO fund. They might be looking for exclusivity for Metaplanet's moving strike warrants. So perhaps they throw in the 0% ordinary bonds as an extra incentive kicker to stay with us. And it seems like the only way they're making money is through these moving strike warrants with Metaplanet.
Interesting. Really interesting. I want to jump to a graph that I think blows most people's mind when they see it the first time. And I think it just really, if a picture or a graph can say more than 1,000 words, I think for Metaplanet, this one is it. Yeah. So wait, let me just try and get want to put us in a way where we're not, well, it's fine. We're not really, let me see. Yeah, I'm just trying to find the best way so that we can see all of the graph and not covering any of it. But this to me is really mind-blowing watching. So these are the different or bunch of the different leveraged Bitcoin equity companies out there on a log chart, the amount of Bitcoin that they hold, and on the top is strategy that is just plowing away and headed towards 1 million Bitcoin on their balance sheet. And then the really interesting thing, I believe, or I think, is whoops, not what I wanted to do. Just really trying to get that. Oh boy, there we go. Just wanted to show more of the chart. But when you look at all these other companies, and then you look at Metaplanet, that has the second longest leveraged Bitcoin equity track record, and you can see how steep that BTC yield is, the accumulation of Bitcoin. It's just really through the roof, and it's actually headed towards, like, let's not even go there, but it's actually, let's just say it's headed towards the line of strategy. And granted, this is not, we're looking at total Bitcoin. We're not looking at Bitcoin per share, which is the real interesting metric. However, Metaplanet is doing, their MNAV is significantly higher and is very accretive, all the things they're doing at the moment. But I think this graph is mind-blowing. It's not just a couple of random buys from Metaplanet that looks good. It's a track record that is just mind-blowing. Brian, what's your thoughts on this?
Yeah, the rate at which they're increasing their Bitcoin is absolutely incredible. One of the things I see the Japanese analysts posting a lot is charts on log charts showing that it's actually exponential growth. Of course, it won't be exponential growth forever because it can't be. But just given the size they're at now, I think the question is, how long can that continue? I think probably for a while longer. Bull market willing, Bitcoin bull market willing. I think there's still a lot of room yet to run here through the end of 2025.
Absolutely, and you're right. Like, of course, it can't go on forever, because eventually there is a limit to how many Bitcoin there are. There's only 21 million, and it's the first time mankind ever has had an actual completely finite commodity, and then it's a digital commodity as well, and it's part of what makes it so phenomenal as money in a digital internet world. But they're not slowing down at the moment, and they definitely have some ways to go. It seems. Ryan, what's your thoughts when you see this graph?
Yeah, when I see this graph, I feel like this is a good reminder to myself as to why I only own, out of this list, Strategy and Metaplanet. Strategy because I believe it's the Berkshire Hathaway of this industry, Saylor being the new Warren Buffett with a ton of tech, leadership, public company experience, and also something of a philosopher/historian. And then Metaplanet being the company that's able to execute on this the fastest for a number of different reasons. I used to be in Semler. I no longer am, only because I think that story is a bit more complex and hard to stand. There's a lot of overhanging complexities that come with any healthcare business, especially one as esoteric and nuanced as Semler. So yeah, I mean, Brian said it well. This obviously cannot continue on this trajectory, and as far as the flipping, I'd put that at a solid 0% chance. There's just no fundamental way that Metaplanet would be able to flip Strategy in the long run. But it is an interesting thought experiment, just doing this log chart to see how impressive the growth of Metaplanet's Bitcoin per share has been relative to all the newer formed Bitcoin treasury companies.
Yeah, very much agree. And also, I really think this thing of, whether one company catches the other, or how much Bitcoin they have, it's not really what is relevant as an investor. What is relevant as an investor is what return can you get. And there might be one company that accumulates Bitcoin a little bit faster, but then the future prospects starts dimming a little bit, and then the stock will underperform. So to me, it's a matter of, well, the Bitcoin that I have outside of, spot, cold storage, Bitcoin far out of reach, where do I get the best return on that? And it doesn't matter if strategy has the most Bitcoin, or Metaplanet will have the most or the second most. It's interesting for the next perspective, I think, for the next stage of this journey, because eventually, when hyper-Bitcoinization has happened, fiat currencies die and Bitcoin is the only money, then I think the most ideal or profitable business model for strategy, for Metaplanet, for the other companies, Semler, etc., no longer is creating a BTC yield, because it's hard to do that when there is no fiat currency that you can suck in capital from as a black hole. But how much can they generate income from this superior balance sheet that they will have? And Saylor will have very highly likely the most solid balance sheet in the world. And he'll be able to use that Bitcoin. I personally believe that they'll easily reach 2.1 million Bitcoin on their balance sheet, probably more. And they'll be able to generate an income from that. So the evaluation in the future, when there's no dollar, will be, in my perspective, a combination of, well, they're going to be valued at the Bitcoin that they have on the balance sheet, plus their ability to earn an income from that. But being Saylor and strategy and number one will be beneficial for that. Metaplanet is going to be up there. It's going to be beneficial for them. So I see, great futures for these two as financial giants. Brian, what's your thoughts on that and the end game, and whether it's important who has the most, or if it's important as an investor where you can get the best return on your Bitcoin?
Yeah, sure. I think there's a few different considerations there. Obviously, growth is important. Size with no growth is not awesome. You still need growth. But when you project out over the long term, I think the interesting thing for Metaplanet will be, how do they successfully reach into new, different, larger pools of capital? One of the things we see strategy doing right now with their preferred stock is really trying to suck capital out of the bond market. How successful will Metaplanet be at that? Right now, they're primarily just doing equity sales. They're doing a little bit of the bonds, but it's mostly equity sales. They're in a favorable country if they get to the point where they are going to do, something preferred like the suck money out of the bond market in Japan. There's a good setup for that, but they have to actually execute on that. The other thing about the long run, I think that the Bitcoin treasury strategy, just as a play, really fundamentally is an arbitrage on the rate of return of Bitcoin versus interest rates. And so, how much longer do we have left on that arbitrage is really how much we have left on the Bitcoin strategy as a viable strategy. And the inflection point to when you might see something like, consumer lending in Bitcoin terms, or, actual Bitcoin banking, it's probably, I think logically, when you think about it, right around the inflection point when the rate of return on Bitcoin comes closer into line with interest rates. That makes sense to me. So that is how I see it.
Nice. Appreciate that. Anything you want to add on that, Ryan?
Yeah, a couple things there. And not to completely derail the conversation, but one of the preliminary assumptions there was around, hyper-Bitcoinization and the potential disappearance of fiat currencies. Me personally, I'm not in that camp. I do think that there will be a consolidation of fiat currencies into the top 5 or top 10 of them. But I'm under the impression that fiat currency is going to be here for the rest of our lives. There's just, and again, not to derail this too much, but to think about the way the world is and the power structures, including NATO, including, the incentive that the United States has to continue on an ongoing basis as the world reserve currency. And I could go on and on about the specifics on that. But so, yeah, I'm in the camp that fiat is going to continue, especially the dollar, throughout our lifetime. With that being said, what does monetization of either of the stacks look like? I think it's still unknown at this point, right? I mean, Saylor has talked about, at least at this phase, we see no necessity to monetize the stack. It's almost more so of what Brian was saying. We believe we can get 30% per year compound annual growth rate on Bitcoin as compared to, treasury bonds, which will basically get you nothing. So we're just collecting that spread in between for the next 20 years. I do, of course, think that things like lending will open up for both companies, perhaps Strategy, perhaps also Metaplanet as being the country leaders, so to speak, and also perhaps maybe the Western leader and the Eastern leader. That's how bullish I am on Metaplanet, is I see them as being like the leading Bitcoin pubco of the global East. So if there is something to be figured out in terms of how to monetize the stack, I am very confident that both of these management teams of folks will be able to figure that out. And then last point here, the thing that I feel more comfortable saying is in regards to Strategy, is that with these preferred offerings and the ability to do more and more preferred offerings, such as, let's say, reloading Strike, right? Let's say we get to $1,000 MicroStrategy at whatever point in the future. We can then reload a new Strike with a $2,000 strike price conversion. Same product, 8%, 2,000 conversion, and then reload that again at 3,000. And then also bring into market these new like Stride type products that cater towards a different group of investors. So to me, it seems like there's no theoretical limit to MicroStrategy's ability to do that, to just keep capturing the spread. And then same thing for Metaplanet. I mean, they're just firing on all cylinders with the 0% ordinary bonds and the moving strike warrants.
Yeah, and so you touch upon something there I've been thinking about as well. That one strike that built-in forever call option is in the money, and it'll just push strike up at the same speed as MSTR common stock. There will be a need for a new preferred stock that is a fixed income, where you have no very limited downside. I personally don't like using margin, because I have seen friends lose everything on a bad day, right? When COVID happened, that crash in March 2020, I was sitting and watching TradingView as Bitcoin dropped 50% in 8 hours. So like, if you have an issue with a pullback or correction or something, I'm sorry, but it ain't nothing compared to seeing Bitcoin lose 50% in 8 hours. That was freaking wild. And what that does, black swans like that, or crazy events, if you have stuff on margin, you could lose everything. That's why I also recommend against people I say, oh, I'm never going to sell my Bitcoin, I'm just going to lend against it. Yeah, but now you have the risk of losing everything, because you just need to be margin called and it's gone. And you blew retiring your bloodline because you didn't want to sell. I'd rather sell a little bit as I need. That's just like on another topic. I just want to call to caution on that. But what I did do after listening to Dan Hillary, and shout out to him, when he did a show with Punter Jeff, is specifically on Strike as well, is because there's so very limited downside, I saw Strike as my reason to get margin, right? Because I paid 12% interest rate on Fidelity to borrow money. Strike, which I bought at $94, now it's $105. At the time gave me a bit more than 8%. So I'm almost sitting on it for free, but 40% of it, in my opinion, is MSTR common stock, because of the built-in. Sooner or later, MSTR, I expect this year is going to blow through the $1,000, and then it's just going to keep pushing the price of that up. So I kind of got almost free, or at least very cheap, strategy exposure, more strategy stock. But when that happens, so I still believe that, let's just say there is a chance that there is a blow off top at the end of this year. That would be the 4-year cycle intact. Maybe not. And I'm happy to discuss that, because that may be not maybe it won't happen because of things like strife and stride, but if we have a blow off top and I want to secure some capital for a potential bear market, what better way to just sell what I need to live from the next 24 months or whatever, and put that into Strike. If there's a bear market, I now have cash at hand, right, with Strike that I could sell off and pay bills. But if there's no bear market, well, there's a built-in call option and it'll just keep going up, right? So it's a very attractive product, I think, for that reason. I wouldn't buy it if it wasn't on margin, unless it's the time of a peak that I want to, secure some funds. Because I blew it in 21 by not, securing funds for the bear market. That hurt, and you don't want to get burned like that twice. But in a situation like that, where Strike now starts acting like MSCI stock, you would need a new preferred with a further out of the money. Thanks for calling that, Ryan. I completely agree. Any thoughts on that, Brian? Anything you want to add to that?
Yeah, I was thinking about just the future of Strike this morning and what they might do. One other structure, I'm not sure if it'd be legally feasible or not, but I think it's obvious there will be more preferred stock like that. But one thing they could do potentially is say they want to reissue it at a $2,000 strike instead of a $1,000 strike. They could do something like a stock split for existing shareholders, and then just rebase the the conversion ratio on the existing strike or something like that. Just was noodling on other ways they could potentially configure it. But I think the Strike product, I think it is highly, highly, highly underrated. One of the things that doesn't get enough coverage is that there's really two ways to win. One is just through, MicroStrategy number go up. The other one is through improved credit ratings. If, let's say, they're able to get an investment grade credit rating, they're able to get the effective dividend yield from 8% down to 4%. Well, that implies a share price of $200. Now, they might not get it down that far. That's pretty ambitious. But the fact is, there's two different ways to win on price appreciation with Strike. And I think it's highly underrated.
Yeah, I mean, I agree on this big time. Myself and punter Jeff were actually talking about this in Vegas last week. We're both of the mindset that, and he knows this stuff better than I do, like the corporate bonds, the high yield corporate bonds, that kind of stuff. And we're both of the mindset that Strike and Strife are already best of breed type instruments, which is of course going to take a lot of time for the general market to come around. But it's really exciting that that's how we're already looking at them. And then the other point there on the 4-year cycle. So I'm convinced that the 4-year cycle is over. If we just look at where we're at now versus where we were like 2 cycles ago, I would have never imagined this soon that Larry Fink would be on board with Bitcoin, that Donald Trump would be at Bitcoin Nashville talking about Bitcoin, that JD Vance would be there this year. And some folks had to wait a couple of hours in line and then got denied at the point of entry. So you can just see how much enthusiasm there is around the political shift, plus the ETFs, plus all these Bitcoin treasury companies coming to market, plus strategies creating instruments that are really best of breed and will give them the ability to keep their foot on the gas pedal through a potential bear market. But yeah, when Bitcoin was a much smaller market cap, it could be moved around easier with less dollars, and it could be moved around like the retail Bitcoin investor sentiment. Now that this thing is getting, baked into BlackRock type portfolios, even at a small allocation, while all these Bitcoin treasury companies are coming to surface, I just can't see it going through like a 70-80% drawdown. Perhaps the trade-off here is such that I do think Bitcoin is going to be a correlated asset, right? Of course, there might be 1 or 2 off days where it's slightly not correlated in either direction. But when we look at all the moments of stress, this is where correlation matters. Anders talked about COVID. We could talk about as recent as last year, August 4th, 2024, I believe it was, the yen carry trade mini blow up. And then also a couple months ago for the tariff drawdown. I mean, everything in unison sold off together except gold, right? Gold is a legitimately non-correlated asset. I know some Bitcoiners kind of wish we had that, we traded in that same way. Maybe that time will come, but one last thing, I saw Shant had a question in the chat. I just wanted to get to it before I forgot. His question was like, really, what's the biggest risk around Metaplanet? To me, I mean, look, I think this thing's a rocket ship. I'm very bullish on Dylan LeClaire as a good friend of mine and also as an operator in the space. I've been very impressed with Simon, especially on the former, Goldman derivative trading background. So he's very much like interconnected into the space in terms of volatility and understanding the trade-offs of really the operation that they're pulling off. To me, the biggest risk to Metaplanet is external. It's just, internal to Japan, but external to Metaplanet in the sense that if more of these in Japan, in-house Bitcoin treasury companies were to come to market with compelling big faces such as a Simon or a Dylan LeClaire, then we're just going to have to see if there really is a only game in town premium for Metaplanet. And that kind of takes us back to something we were talking about at the beginning of the MNAVs. And the MNAVs of Metaplanet and MicroStrategy just, of course, cannot be treated on a one-to-one. They shouldn't be the same. There shouldn't be a sense of uniformity, especially with how unique this story in Japan is. But yeah, I think that's really the biggest risk is just more of these popping up in Japan.
Right. And I mean, there's so many things, questions I want to ask you guys. There's so, like, every time we talk on a topic, it brings two new things I think important to talk about. Like, we could go all day, but Brian, I know you're actually out there working hard and mining fiat, and you have a back end, but so I think that's a really interesting thing just to touch upon if we should touch as we carry on the competition. Well, it's healthy. Well, I don't know if it's competition, but there is some level of competition for investor capital, right? It's not about strategy having the most Bitcoin so they have a monopoly. That's not the monopoly. That's not the product. The product is capital products, their attractiveness to raise funds to buy more Bitcoin. And the way I see it, Metaplanet right now has a monopoly of doing this in Japan. Doc stacks. Interesting to see Josh in there. How you doing? Everyone, yeah, almost 800 people watching live. Thanks for watching, everyone. Appreciate it. I think Doc stacks here has something important. So Japan is not off limits to strategy. I think a lot of people are considering this in the medium long term. So what we'll see now probably is strategy, as Saylor said, will start going around the world and offering these products and compete for capital backed by Bitcoin to use that capital to buy Bitcoin. And Metaplanet opened up a company in Florida in order to take it further, I guess, than just their listing here on the OTC. They'll probably go on NASDAQ or NYSE, but also I presume for the type of fixed income products that we haven't really seen them do yet. So I think now, where especially in US, there's so many LPs competing for investor funds. Like, yes, we're in the same boat. It's all good for Bitcoin, but they are competing for investor funds. That might start being more of a global competition where you'll see, let's say you go to France, and in France, you'll see Metaplanet bonds, you'll see strategy bonds, you'll see the blockchain group, bonds, etc. Brian, do you have some thoughts on that?
Sure.
On that competition.
Yeah, and I want to touch briefly on the risks too before I talk about that. There's a couple other risks in the Japanese market. That, let's say, they changed the capital gains tax from the high 50%. It is now down to the 20% to match that on equities. that potentially is a risk. But then also, they don't have ETFs yet. There's all these different kinds of competitors that could come to market in different packages. So I think Ryan was spot on about that. But a point I wanted to make there is that Japan is very, very, very slow to change. They're very quick to react to negative happenings, but they're very, very slow to unwind that. And one thing I've heard Dylan talk about, heard Simon talk about, is that there is still overhang from Mt. Gox in Japan. A lot of people forget that Mt. Gox is based in Japan. And so there's still a lot of, I think, fear among the regulators there about Bitcoin, that those lessons are not forgotten yet. So I think the upshot there is that some of these structural advantages could persist longer than people think they might, because it'll take longer to unwind them. And in terms of, could another Bitcoin treasury company competitor in Japan come and eat Metaplanet's lunch? I think the question is really, what stage of development is Metaplanet when this competitor comes about? Right now, if they come about competing for equity, the market's still pretty big. I think they're not even, Metaplanet has not fully tapped the Japanese market, so there's probably room for more competitors. But if by the time this other competitor comes online, Metaplanet is at the point where they're trying to tap the bond market with preferred stock offerings, it may not even matter. And to the other point, well, Strategy could just go to, Japan and launch their offerings and then meet Metaplanet's launch. Well, I don't think it'll be that easy. One thing that, if you've lived in Asia for any amount of time, you come to appreciate is just how much effort there is to put up barriers to entry for foreign companies. So, what exactly those barriers would look like, I, can't fully detail, but there will be a home team advantage. There will be a home team preference, and if Metaplanet has an offering out there that's even remotely similar terms, I think they will have a huge advantage.
I love that, Brian. I love the fact that you lived in Japan for several years and you're giving us insights here that me and Ryan just, and probably most of the audience that haven't lived in Japan would see or know. That's really awesome, man. And yeah, I guess that's a cultural thing. It'll play out. There'll be a preference. Look, like Metaplanet is our Japanese stock. That's the LP we're going with. In Japan, as Ryan said, I think early on, was the second largest stock market in the world, the second largest economy, right? So just looking at those things right there, will they be able to go from 88,800 to 88 Bitcoin to a lot more? Well, probably, because if they are in a situation where they are a preferred stock for the local audience, which is the second largest economy in the world, they'll probably end up with 500,000 Bitcoin or more. Like, again, for the people that weren't there earlier in the show, when you look at these different Bitcoin leveraged equities and their trajectory, then Metaplanet just is, I think, not only executing phenomenally, they also have some structural advantages of having a monopoly currently on raising leveraged Bitcoin equity funds in Japan, being such a giant capital market. So how do you guys see? Well, Ryan, I don't know if you want to add anything to that. I very much would love, if you guys have anything to say. I prefer that you guys talk instead of myself. But if you have anything to add to Brian's points there or comments.
Just one quick thing. I think one of the biggest opportunities, especially for the American ADR, would be the unlocking of an options market. I know I personally would love it, because then it would open up the potential. Like, now I'm in the building the position phase. Let's say 6 months, a year, even 2 years, we get an options market on the MTPLF. Then that opens up immediately me to sell covered calls at much higher strike prices than where spot is, because I believe we're in the ballpark of 190 to 200 implied vol on Metaplanet. So I see that. And of course, that could bring in an upside catalyst and give people the opportunity to take long or short, asymmetric positions on calls or puts. So I do see that as one of the biggest opportunities. But yeah, I'm happy to go on with the next question.
All right, cool. Well, I've heard several people say that, and I think that would be super, super interesting. A lot of us do love options. I presume that we would need to see a proper stock listing of MTPLF in US, either NASDAQ or NYSE, for that to happen. Are you guys aware of what is a realistic timeline for that? I think it's probably the outperforming OTC stock in US at the moment, I presume.
Yeah, I do have some input on that. So I think it was in an interview with Tim Kotzman, Dylan LeClaire said they were, I want to say he said they were 12 to 15 months away from listing like a full-blown ADR on NASDAQ. So in various, conversations and things I've heard, I think they are not really in a big push to get that cross-listing done just yet. It sounds to me like they're really focused on the home market for now, and they're not really super focused on capital raising in the U.S. market. The subsidiary they're opening in the United States also is very early stage. I don't think they've even really fully decided on the location yet. So, I'm super bullish about an options market coming. I would also love it. I think it's also probably a bit further away. Like I said, if we just go based on what Dylan said, it could still be more than a year away.
Oh, more than a year. Okay. Yeah.
Yeah. And because I went through this with Semler at the time when thinking when they would have an options market. There's 5 main pieces of criteria outside of just the, getting an American ADR on NASDAQ or New York Stock Exchange. It seems like a couple of the bigger ones have already been satisfied to a degree. Climb the Ladder's been talking about this ad nauseum, as I think he should, the volume pickup. The volume pickup is one of the necessary 5 pieces. You have to trade a certain amount of stock each day. Another one of the big potential hangups could be you need at least 2,000 individual shareholders. And that seemed to be like the two last pieces of criteria that Semler needed, especially the 2,000 shareholders. So it seems like it's possible. And it also seems like, they're more focused on the Japan markets. But if and when that time comes and they did want to, raise capital in the American markets, I think it would be very well received by the existing investors.
Yeah. I think just on X alone, we easily way surpassed the 2,000 Metaplanet shareholders. And I was there at the meet and greet with Simon and Dylan in Bakers, and there was quite an atmosphere and a rush and excitement and just crowded, and everybody want to say hi to Simon and Dylan. So this, going back a little bit, the competition between leveraged Bitcoin equities for investor focus, for investor capital. It's funny. So the story you said, Ryan, that you own Strategy and you own Metaplanet, and you have previously owned Semler and sold it again. I'm in exactly the same position, actually. I did that. And I think right now, I haven't verified it, but someone tweeted out, I think that Semler actually is around MNAV1 now. But the thing is, investors will go with where they can see, where they expect the best return. And the high MNAV that Metaplanet has enables them to do very accretive dilution of their stock, and the yield that they're creating is just through the roof compared to Strategy. Now, I think Strategy is going to do really well with their bond products, of which there are now 3. They used to be Strike and then Strife, and now we also have Stride. It's hard for someone where it's not the first language. Now they're so close to each other in words or in names. But what I personally could see in the 4-year cycle is, if these products really take off, especially Strife and Stride, the ones where there's no link to Bitcoin upside. There's no link to strategy stock. There's no convertibility. It is straight up 100% a fixed income product. So for the first time ever, we now have a Bitcoin backed investment that is that does not care about whether the price of Bitcoin or the stock behind it that they're buying the product for goes down. So with Stride and Strive that are looking at and targeting a $300 trillion global bond market, if they get, strategy entering S&P 500 will improve their credit rating once these fixed income products also have been around enough and traded enough to get their own credit rating. I don't know where we are right now with that. I don't know what the outlook is, but that will happen sooner or later. If they have a product that is now, this is the most, the most attractive product in a $300 trillion bond market, they'll sell a couple of $1 trillion of that. And that will continue through, let's say Bitcoin wants to do a bear market because people, they degen, they over lever, they get stopped out, and the avalanche wants to start going down of the price of Bitcoin. But if strategy is buying $100 billion worth of Bitcoin every month because they're selling a lot of Stride and Strive, and those buyers don't care about the price of Bitcoin going down because they are so high in the capital stack, they're so secure, those billions of dollars will just keep flowing. And to me, that is the main reason that could end the bear market. Thoughts on that, gentlemen? And Brian, I know you got a hard cap as well. So let's go with you first.
Yeah, sure. So I'll answer this one, then I got to pop off. So the ability to sell these preferreds during a bear market, I think, is very compelling. Will it end a bear market? I have a hard time seeing it ending a bear market in and of itself. But one of the things that people forget about the last bear market is that strategy traded down to, close to 50% discount to NAV at the bottom. And what these preferreds could do is not only allow them to buy more Bitcoin during the bear market, but do share buybacks to defend that 1x MNAV, and in a way that doesn't involve selling Bitcoin, because that's one of the other narratives you hear about lately is that, you could sell Bitcoin in a bear market to defend 1x MNAV. But I think that would be, a PR disaster for anybody who does it, unless they've telegraphed it well ahead of time and have really managed those investor expectations well. But these products, I think they're a fantastic way to do that. The other side of that is that probably the credit spread will widen justifiably a little bit during the bear market. But depending on what that is, it could still be a very reasonable rate for a strategy to pay to keep increasing their Bitcoin per share, either through Bitcoin buys or through share buybacks.
Nice. Thanks for that comment. And let me know when you gotta go. Is it around this time?
Yeah, I could probably go see a few more minutes. Yeah.
Okay, sure. Ryan, excellent, Brian. Ryan, you have some. What's your thoughts on that? And Stride and Strive potentially means strategy buying so much Bitcoin that it could end the bear market by basically buying more than a bear market avalanche and margin calls would put on the market. Thoughts on that?
I would say that no one catalyst exists in a vacuum. Of course, certain things are going to be more impactful than others. So when you think about the Strife and Stride dynamic in a macro environment in which it appears M2 money supply is going up, and we know with certainty that the White House has a huge vested interest in lowering interest rates. So if that global M2 going higher, US interest rates going lower, that in and of itself sets up like an awesome backdrop. And then once we start thinking about, all these other Bitcoin treasury companies coming to market and the proliferation of the US spot Bitcoin ETFs, all of these things together, all these ingredients, it would seem as if the bear markets on a go forward basis, of which there will be, I'm just in the camp that it'll be less pronounced. Like the depth of drawdown might only hit the 40-50% mark instead of 70-80-90. So yeah, I think that's where I would be on that.
Right. I do want to just share with everyone that, so me looking back at the previous bear markets, the ones after a, having bull run, significant runoff and blow off top, it was very funny. If you go back all the way back in time to the first one, the drawdown was 95%. The next one was drawdown 90%. The next one was 85, and then it was 80. And I can't remember where we are right now. I am going to look at that before we reach Q4, where a normal 4-year cycle would have its blow off top. But they are becoming less each time, and maybe this time is different. But that's what I also thought in 2021, and it wasn't different. So but maybe if this time around, I'm like, no, okay, it's not going to be different. It's never going to be different. That's the time it is going to be different, right? Market will mess with you. Brian, I know time is of essence there to you, and you got to go. So I just want to say thank you so much for jumping on, Brian. And I recommend people to follow Brian. You can see his X handle there at BTC_overflow. Just really great signal on Metaplanet, and the reason that I brought Brian in here, and hopefully it is. So I'm gonna do these Metaplanet roundtables Tuesday 9 a.m. PST going forward, hoping to have climbed that ladder on next Tuesday, and actually a bunch more. But Brian, thank you so much for being here, and just great insights from you, and the further added value of you having lived in Japan.
Yeah, thanks for having me on. One thought I will leave you with about the potential bear market is I think the structure of leverage is very different than heading into a potential bear market, if we were to do that now, than last cycle. Last cycle is basically a bunch of non-recourse. I'm saying the wrong things. Uncollateralized loans. That's the word I'm looking for. Hedge funds with uncollateralized loans, just kind of YOLOing out the market, making a bunch of bad bets, and then getting liquidated, and taking down everybody else with them. The structure of the debt in the Bitcoin Treasury companies is very different. The leverage ratios are much more conservative, and the debt, there is nobody that's going to be heavily levered with debt coming due in 2026 and 2027. So pretty much all these companies are going to be in a position to ride it out without any forced selling for the next 2 to 3 years. So the impetus that would lead to mass liquidations and a severe drawdown from that side just doesn't exist the way that the debt is structured right now. So the stock price would obviously be rough for them if there's a 40-50% Bitcoin drawdown, but they're in a much better position to weather it than over leveraged hedge funds. So that was my thought. Thanks for having me on. I do need to pop off now. Hope everybody enjoyed the content.
Absolutely. You guys are so solid. And Brian, do you already now know if you'll be able to join on next Tuesday? Would that be a possibility for you? Same time, same place?
Probably. I'll have to get back to you. Probably.
See what work schedule will be like. Appreciate it. All right. Thank you so much, Brian. I'll see you again soon.
Good to hear from you, Brian.
Good to see you too, Ryan. All right. Thanks, Anders. Bye, guys.
All right. Thanks, Brian. Cheers. Ryan, we can carry on a little bit if you want. So shout out there to Treasury Voyager. I miss getting the Metaplanet t-shirt that you were wearing because I didn't join the Discord. I feel I have so many apps for communication already. It's too rare that I open up Telegram. I miss stuff, so I'm like, a new app, a new thing. But I'm starting to get the feeling that that the Metaplanet Dojo Discord is something that I need to join. Otherwise, there's too much going on in that. I feel I'm missing out on the Metaplanet community, and I do love it and do want to be part of the conversation. So I guess I gotta Boomer needs to learn a new app, Ryan. What the F?
Yeah, I mean, listen, I feel like we've talked about this in the past, like the amount of messaging apps and the amount of messages that, we send and receive each day, that almost becomes a full-time job in and of itself. And I always feel bad for not getting back to people, but I just can't, between Twitter, Discord, Telegram, Signal, LinkedIn, email, normal text messages. It just becomes a giant mess at a certain point.
Yeah, it becomes a bit, I guess, and also just the time needed to go through X and stay updated, right, on everything happening. X is definitely, I think he really tweaked the algorithm pretty well, because I can now spend hours every day on X and feel like I'm getting new necessary information. Like I used to follow like Bitcoin. Now it's Bitcoin, it's strategy, it's Metaplanet, it's keeping an eye on other LBEs. It's a lot going on. So just a bit of information, I guess. So I'm planning to do these Metaplanet roundtables every Tuesday, 9 a.m. PST, and have, if I can have you back, Ryan and Brian. Ryan, yeah, and Brian, and climb that ladder is on board. So hopefully we'll have a great chat next Tuesday. I know that has been a little bit of my challenge on MSGR Mondays, where I'm just doing it myself mostly, and then it becomes like yesterday, it's still jet lagged from arriving from Denmark to Vegas and all of that, and I ended up having a nap instead of doing. But I wanna get into like, if I make this every Tuesday that time and I rely on other people joining, it's like, okay, now I gotta do it every Tuesday at that time. But I do wanna. It's been a while with MSGR Mondays, and reason is the traveling, then Vegas. I'm gonna get back into pumping more of those out, and I'll switch the cap today, I think, and do actually an episode of MSGR Mondays, and there you go.
That's on.
That episode will be how to get Bitcoin exposure into grandma's account, into her portfolio. And spoiler alert, strike, I think, with such a limited downside, but such an insane upside still. Just, that strike is the way you can get Bitcoin exposure into grandma's account. Ryan, man, good to see you again. Good to have you back on. I hope you could be down to joining on future episodes. How are you looking next Tuesday, or do you need to do it like from time to time, see if you're available? I want you as part of the crew, man.
Yeah, no, and hey, look, I'm probably the easiest audience to speak to about the troubles of podcasting and how the ups and downs of life can get in there, because I do want to be doing this stuff more. Next Tuesday I'll be able to be there. I'll be on the East Coast, but I'll still be able to join. And it's so great you brought up this whole like grandmother's example, because I'm literally doing this with my mom right now. My mom, has nice. She has a little bit of, excess cash and wants to do something with it. So about a year ago, she's a very conservative person, no finance background. She likes following this stuff because like I'm into it, but very conservative in her own right. So she went and did CDs through the bank, like checking deposits. It's it's basically the same rate that you'll ever get in a money market fund if you just put money in a brokerage account but don't take a position. You get about 4%. I think Strike and Strife, like that combo of the 8% and 10%, that's already a better product, much better, really, a doubling of the interest rate. And then plus Strike, you can convert into, the MicroStrategy Common. So, yeah, I mean, the use case is real. She's my mom, but my sisters have kids, so she's a grandmother herself. So she like really fits the example that you're looking for.
There you go. How to get Bitcoin exposure into grandma's account. You buy Strike, very limited downside. And Ryan, your mother is an example of that. I love it. That's how we roll.
It really does make a lot of sense, because like I was saying, me and Jeff believe these are best of breed products for what they are, right? Not something that's going to necessarily outperform Bitcoin or MicroStrategy or anything like that, but the product as it is. I mean, this stuff is best of breed. And since my mother's, her hurdle rate of the CDs, that 4% interest a year, is so low, this then, really presents an attractive option.
Yeah, I absolutely agree, and that's why I'll be pitching that. And Rad here, Vladdy, also comments on that. My dad retired, just moved his low risk retirement into 50 strike and 50% strive, and so the whole portfolio is now yielding nicely for him, right? Thumbs up, Rad, on that positioning of your dad. And on top of that, I want to, because you said strike might not outperform Bitcoin. I'm going to push back on that, because sure. Well, first of all, and this is just a joke. It's not something, this is just looking back a few weeks. Like when I bought it, I don't know, 3 weeks ago, strike. Since then, it's actually outperformed Bitcoin. Now, that's not something I expect going forward. The point I want to make is, just like the convertible bonds of Strategy last year actually outperformed Bitcoin. So with strike, even though Strategy has to go up 150% before they reach that, they start pushing the price of Strategy or of strike up. When the price of 10 strike is starting to be close to the value of one MSTR common stock, that's when they start moving up. So just like with the convertible bonds, where we may have 6 months of just being a fixed income flat, once it's being pushed up by Strategy, and the thing with Strategy is it has historically, that's why we hear outperform Bitcoin, because it's a leverage play. They take on debt. I mean, I'm just pushing back here jokingly, Ryan. But essentially, sooner or later, when strike is high enough that they start pushing strike up because of their share price, then they actually end up moving at the speed of Strategy, which outperforms Bitcoin. So you're buying a fixed income product that yields a return. At the same time, it'll outperform Bitcoin. Likely not financial advice. None of this is financial advice. These are just a couple of jokers with T-shirts and caps and sunglasses talking about the things we like. So, but it's more like financial entertainment. If you like the financial entertainment, feel free to like and subscribe and share it with other people that need to laugh at a couple of jokers with a cap on talking about financial products, right? But yeah, go ahead.
So yeah, it's definitely my nose is around this morning. It's definitely a possibility that strike can go ahead and outperform Bitcoin. But the way I think of that is like, that's like a nice bonus.
Yeah,
right?
yeah.
That's like a pleasant surprise. If investors go into this with the expectation of this is the premier perpetual preferred convertible bond security, if you just think of it like in those terms and you get 8 or 10%, and that yield will go down as the underlying goes up, but there's still the value creation, because assuming the investor didn't just get into the product yesterday, they participated in that capital appreciation and collected some dividends along the way. Plus, then I do firmly believe that there will be more and more strikes, strike type products at higher and higher MicroStrategy. I don't know if they'll do this in $1,000 intervals, like 1,000 MicroStrategy, 2,000, 3,000, or if it'll be $500 increments. I'm not sure, but there will be more of them. And if they do outperform Bitcoin, then that's just the cherry on top, the unexpected pleasant surprise.
No, absolutely. And imagine this conversation you're going to have with your mom, like maybe 1 or 2 years from now. She'd be like, Ryan, you bought this fixed income product from me, yielding a return. Why is it up 300%? Like it's fixed income. It's like a bond type product. Why has it gone up 300%? And you'd be like, Mom, that's what I do. I'm here for you. I love you.
Right. Yeah, then I'll get to look like the hero, and hopefully it does look that way. Yeah.
It likely will. Not financial advice, but yeah, that's. Well, there's so many more things we could talk about in Metaplanet, but I also want to be respectful of your time, Ryan. And I'm excited to hear that next Tuesday you should be able to make it. And it's no hard commitment. If you can't make it, you can't make it, right? Life happens. We both know we're both old enough, but you're not really. But we both are aware that life can happen and things happen, and then you're prevented. But sure hope that. So that'll be noon East Coast next Tuesday, and 9 a.m. PST. We'll do the next Metaplanet Roundtable 2. Hopefully, climb that ladder. We'll be here. There's a bunch of others. I am waiting also for great account and all-around person, Adam Livingston. He's also down, but he's still working the last days of his job, and so and I think he's the type of person working hard. So he can't pull out out of the fiat mine. But once he's done, he's down to go as well. There's a couple of more, but yeah, that's about it. And hopefully every Tuesday 9 a.m. PST we'll have great Metaplanet discussions. I will get the strategy hat back on and put out some more episodes of that. And just we just covered my next MSTR Mondays. Strike is the way to get Bitcoin exposure into a grandma's account. Ryan, love you, brother. Always fun to have you on. Good to see you. Anything you want to end up with or finish with? Any final words or anything you want to pitch?
Yeah, if I may, perhaps there was one last thing top of mind, and I hope we get into this more on an ongoing basis. But yeah, next week will be great. I'll have way more energy at 12 noon as compared to 9 a.m. West Coast time. But I just want to touch on this element of debt, and I think this really pertains to both MicroStrategy and Metaplanet. And by the way, I reserve the right to keep calling it MicroStrategy for at least another 12 months. That word's been so baked into my psyche. But so the notion of debt. And I think if you think back to the way like me and Jeff started Quantbros 1, it was never like, let's just look at a Bitcoin treasury company in a vacuum. It was like, no, let's take a step back and actually raise the question, how do you value any equity? So I say that as like, how should we look at the debt of any company? And the reason I say that is in strategy specifically, to me, they have no debt. Because it's all going to be converted into future equity, right? Even the dividend payouts that are going to be paid for Strike, Strife, Stride, other follow-on products, that's going to be paid for with Class A common share ATM. And then, of course, the convertible bonds that we still have, they're going to convert into equity as well. So when I think of like MicroStrategy and also Metaplanet, I assume is going to take that similar of an approach, right? Like they're going to pay back those 0% ordinary bonds with their Class A ATM, unless they were going to have a cash flowing business with that as well. So that's strategy and Metaplanet. Now let's think about all of the other companies of the world, right? And the reason I bring this up is because so much of the financial discussion around MicroStrategy was that it's over leveraged. To me, again, I just laid out how I don't even see it as debt because it's all simply future equity. But you look at like the rest of the industries of the world. Let's start with autos briefly. Both Ford and GM, last I looked, they have a debt position on their balance sheet that exceeds their market cap. And I believe by a multiple of either 2 or 3.
That's so funny.
That's like true debt, right? Like they're paying their interest expense on that debt. They're paying it with free cash flow in like the traditional debt sense. So I don't think they're ever going to have the capacity to ever pay this debt off, especially with how they're both doing buybacks. Then you look at some other like just bad uninvestable industries such as the airlines. Same thing. These are linear businesses that have no real asymmetry to them. Because if you run an airline and you want to get more like ticket revenue, you have to put more and more planes up in the sky, more fuel costs, more maintenance costs on planes. You have to pay more pilots and more, crews to work the plane. So they're linear, bad businesses, no real asymmetric upside, and they have traditional debt. And we could go down throughout all the industries, even tech companies, consumer discretionary staples, healthcare companies who have legitimately large debt positions, and they're paying them off in the old way, the much harder way of having to keep constantly earning free cash flow to service your interest payments in the near term. And then you just have this huge overhang of debt with no real way of like paying it off. So I say all of that to say this narrative around like, and Brian really inspired me to say this, because he was talking about, maybe some of the FTXs of old or the Three Arrows Capital who like were legitimately over levered or, outright fraudulent, stealing money like FTX. I just don't see that in the Bitcoin treasury space, right? Relative to other companies who have been here for a while. I just don't see this over leverage risk.
Yeah, no, it's a great point, and I've been talking with people about that as well. I don't really see any of these LBEs that we're following. Clearly, Strategy and Metaplanet, the two that we're probably mostly invested in. The Bitcoin has not been put up as collateral; they are unencumbered. They are at zero risk of getting a margin call and being forced to sell the Bitcoin. That's a very important point. Now, I don't know if there's some random other small LBE, but there's not that many that are putting that Bitcoin up as collateral. As far as I know, it's not the case. And so I don't see them at the risk of collapsing because of that. If anything, I think maybe there will be people that get carried away, like retail investors getting carried away by the fast increases in share prices and start buying LBs themselves on margin, which I would recommend against. That's dangerous. The only thing I bought on margin pretty much is Strike because of the limited downside. Actually, Ryan, that reminds me. So, because you spoke about the interest rate a little while back, that we might see, now the Fed reducing interest rate, that made that come down to half now. That's what Trump really wants the interest rate to come down. I just want to remind everyone that if the interest rate in United States drops to half, the market will be willing to pay double of what they're currently paying for Strife and Strike and soon Strike. To get the same yield compared to the market, if the interest rate is cut in half, the price goes the opposite way, double, which means that these could trade at $200 a piece. Now, I'm not saying buy Strike instead of MSTR unless you're in a situation like me where it's, okay, I'm doing it on margin, so I can't afford a downside on that. Or if it's your grandma or your parents that you need to secure against a downside, then they're great products. But if the interest rate goes down in the economy, then they have further significant upside. Let's put it that way.
Yeah, I mean, if rates did get cut in half, I mean, it would change a lot of things, both on like the investor perspective. That's what pushes investors further and further out on the risk curve when rates are low, because they can't just get all their interest that they need in a risk-free sense. And then also for the companies, it would allow them to have lower cost of capital, which is great. And it would really allow for a proliferation of these types of products. You know what I mean? At 6, 7, 8, 10% interest rates, if and when the Fed funds is at 2%. I mean, I think there could just, and Josh Mandel actually said this in one of the comments. He said, like, when we get back into a ZERP type environment, which means zero interest rate policy, it really could be Strife that takes us to Valhalla, because there could be an overwhelming demand for fresh Strife, or perhaps a newly created similar Strife type product to hit the market. So there could be, more and more ATMs there as a way to raise funds to buy more Bitcoin.
Yeah, agree. It's a great point, and I really think that still the power or importance of Strife, and now also Stride, although I'm not fully on top of that yet. That just came out yesterday. Maybe you are. I think there's already some people have done some videos explaining the differences, and feel free, like let me know if you can cut that down in a TLDR. That'd be awesome for the audience, including myself, Ryan. But the importance of these Strife and Stride products for strategy itself, and potential for the price of Bitcoin, because they're targeting a $300 trillion bond market. If these become attractive and popular products, that market is so big. I mean, Bitcoin itself is what, 2 trillion or a little bit above 2 trillion? Like, one company within this $2 trillion market, if they have a product that starts really sucking in value from the $300 trillion bond market, like, Valhalla is next, right? Like, it's all bets are off, and it really could. I mean, the size of the market we're talking about there is just is through the roof, and it could change everything, and it can change the trajectory of the Bitcoin price very significantly. Donna, that is right. Ryan is back, baby. She's right here. So another comment there from Dan. All I know is Metaplanet to $300 because Climb says so. I couldn't agree more. I do believe Metaplanet will hit $300. Things are definitely looking good right now. Thoughts, Ryan?
Yeah. For those who are of the mindset that like Bitcoin can really eat into the fixed income market and really, serve as an alternative to what companies have been doing for the past century, which is just holding treasury bills on their balance sheet. Safety and a Moose had said, famously, that gold is just the appetizer. The main steak, baby, the main entree is really the fixed income markets. And what we're seeing strategy do is they're really, refining the Bitcoin into a package that works for these people who do allocate, billions, tens of billions, hundreds of billions of dollars into fixed income instruments. So yeah, whereas you have Strike, this is a convertible preferred perpetual instrument that'll pay you 8% dividend yield with the ability to convert into MicroStrategy at the strike price of $1,000 a share. The difference between that and Strife is Strife has no, conversion price. It just gives you the biggest yield of them all. And again, this is also perpetual and preferred. Stride, I almost don't even want to talk about Stride too much. I mean, this just came out yesterday, so I still have to get like spun up on it, but it seems like from, the TLDR that Dylan LeClaire gave, that Strife is the, institutional grade perpetual bond security that we have. Stride is more of like the junk bond, or what we would think of as like the higher yielding bond, which I still kind of have to wrap my head around that, because then I would imagine the yield on that would be more like 12%, something a little bit higher than Strife. But like I said, I'm still going to have to, what's up, Dana? I'm still going to have to do a little bit of work on Stride myself to see how that fits into the universe of strategy fixed income products.
Yeah, it's. I think I've never really been as excited and happy to hear the word junk bond. I think it's actually like a positive, right? With Stride, interesting. So what I need to narrow in on is that so it has the same nominal yield as Strife, which is 10%, $10 on the $100 equity. When it trades above $100, you're essentially getting less than 10% in real terms, but you're still getting the $10 per equity in yield. I need to understand. So first of all, Strife is the number one in the capital stack ever, as I understand. I think Saylor said that. In case of a bankruptcy, Strife will always be number one.
Sure.
So that is the investment grade. Like the outstanding is like 1 billion. They have 60 billion or something like that worth of Bitcoin. So we're talking about Bitcoin needs to collapse to nothing for that even to be in danger of not getting paid out in situation of a bankruptcy, which I don't see happening anyway for strategy. So Stride with a D is a little bit is behind that. I think also behind Strike. I'm not 100% sure. But what I need to understand is they both yielding 10%. There's something about that the company, the management can decide, yeah, we don't feel like paying that that yield on Stride, which they kind of have to with Strife. But also I saw comments about that, well, they do have to do it eventually, which makes sense because who wants to buy a product where the management can just say, well, it's not in our interest to pay yield anymore, period, right? Then it goes to zero. I want to understand, I need to understand and look into what's the exact difference there. But bottom line is because of the lower rank in the capital stack, because there seems to be some kind of less guarantee of when you get the dividend. I do believe you still get the dividend. It will trade lower, and trading lower, getting the same 10% yield means that your effective yield will be higher. Like it may trade at $95 while Strife is at 105. It may also trade at 180 when Strife is at 200. So for the yield first focused buyers, that will be attractive for them. They'll get the bigger yield, right? Is that about So Stride is non-cumulative. I pulled it off. I said that word, non-cumulative. I pulled it off. So what does that mean, Ryan? Exactly. Does that mean they don't get an interest rate on the not paid out interest or yield, or what does that mean? And Josh, man, if you write it in the chat, I'll be happy to put it on screen. What it means. What does that mean? It's non-cumulative.
Yeah, I think we are going to need to phone a Josh Mandel friend on this. I'm familiar with what non-cumulative means, but just not in this context with the dividend payout. Like I said, I still got to look into this stuff. It came out yesterday.
Yeah.
But I think the big takeaway for me with all of them, and you had touched on this earlier, is that, it's unencumbered, non-collateralized fixed income instruments which have no recourse, which means there is no margin call type price for these types of instruments. So that's at a high level with all of them. That's what I'm most excited about.
Yeah. Good stuff. How are you looking? On time, should we end it here? We've been going for an hour, 40 minutes. I could keep going, but nature's calling. So
yeah, I get that too. I know what that's like on podcasts when you really got to run. I get it.
Right.
So I hear you on that. I've got a great list of notes for next week and some things I want to, come a bit more prepared on. So I'm happy to wrap here.
That's awesome. Wait, let's just see if Josh, he wrote something. I'm putting that on stream. Okay. Strife, this is from Josh, man. It's on the screen. Strife has a requirement for all dividend payments, and these step up over time, so the board cannot get away from paying Strife holders. Okay.
Simon had a good answer on non-cumulative.
Okay, gotcha. Thank you, Simon. Reading it for those that are not looking at the screen, if they're walking with their phone in their pocket or something. Simon says non-cumulative. I think that's the fourth time I pull of saying it without really messing it up. It's a slightly tricky word. Non-cumulative means if they miss a dividend, they don't have to pay it additionally in the next dividend. I don't get that. Why would anyone buy something where you're not sure you're getting the dividend?
Well, it's kind of a contrast instrument to Strife, where like you are expected to get the dividend, and if you don't, it actually grows larger from that point on. But I am with you. I think the yield, and again, this just came out yesterday. We're all literally learning in real time. I would have thought that the yield on Stride would be 12%, especially because that's, and when we say like junk bonds, that what we're implying is they're higher risk, higher yield, higher total return potential. So you would think there'd want to be a little one up on Strife there in terms of yield, but we're going to learn more as we go.
I guess the market will just price it lower, and that way you're going to get the higher yield. I think Sailor just likes, we're not paying more than 10%.
Right.
If you're not happy, you're buying it cheaper, which will then give you the higher. Go another to us. If we go another to us, I'm going to need a one and a half minute break. All right, Josh, man, trust God and all others verify. Amen to that, brother. Let's just see what else here Simon is saying. I think most dividends are non-cumulative. Lots of dividend stocks sometimes choose not to pay a dividend because the business isn't going well.
That's very true, by the way. They can be turned off. And it's a bad sign if it is turned off for those types of companies.
I guess I've gotten a little bit closer with these explanations, but I don't fully understand why anyone would buy something where the management don't eventually have to pay that dividend. I don't get it. I gotta be honest.
Let's think about it and come back next week. I bet you we have a stronger understanding in just a week's time.
Here's what I'll do. I will, over the next week, look at the post from smart people explaining how it works, and then I may know next Tuesday. If not, I know Ryan will know, and that's why he's here, to smarten up the show. What else? I'm just looking at, okay, dividend rock pool risk. Maybe this helps it trade at a discount. Yep, that agreed to that. It will yield higher because it's going to trade at a discount. Taking a chance, throwing another chat up here that I haven't read first. From Simon, I think strategy will try hard to pay all dividends on Stride, but together with ATMing it hard, it means Stride yield will be higher. I agree with that. And Strife will be more attractive. Yes, as we spoke about, it's first in the capital stack. Ryan, thank you so much for coming on. It was a pleasure. So for anyone who just recently joined, let me just real quickly once again show a graph that makes I think us Metaplanet shareholders excited, and that is the second longest track record in the leveraged Bitcoin equity space. And they have made, I think, close to 40 Bitcoin purchases now. And when you look on a log chart, how aggressively they're yielding, we're just going to have to tip the hat and say they're absolutely destroying it and killing it. Right? It's through the roof, and they're outperforming despite having reached the size that they have. We've spoken on this episode about awesome. I'll be DMing there with Josh, man. I was DMing with Josh, man, before he blew up with the
84K.
The prophecy, yeah. So I guess I'm lucky I still get to talk to Josh. Appreciate it, brother, for that explanation. So Josh is going to help me understand, so I know next Tuesday. That's awesome. So that's why now this is a new show that I'm doing with where I try to get the smartest Metaplanet analysts, thinkers, kid analysts on the show every Tuesday, 9 a.m. PST. And Ryan is one of my favorite kid analysts. You're too old to be called a kid analyst compared to me, but let's just call you a kid analyst.
I got to hold on to it for a few more years.
Hold on to it. Yeah, just hold on to it. And apart from that, I'm still doing the MSTR on Mondays. I will do one, I think, today, Tuesday. It's been weeks with traveling, jet lag, Vegas, everything. I'm not done with MSTR on Mondays. It's still, I think, a really exciting topic, obviously. And Ryan, maybe one day we should do another toxic happy hour like we did in December. However, it was pulled off by YouTube within 24 hours because I said some things about Bill Gates that weren't that weren't sitting well with YouTube. I think.
Oh, jeez. That's
gotta
above my pay grade. No comment.
So I'll just like not touch upon that anymore. Anyways, Ryan, man, thank you so much for being here. Happy to have you back on YouTube, and look forward to see you next Tuesday. And then hopefully Climb That Ladder will be here as well. Let's see if Brian can join. Brian. Let me just get it nice. So we had Brian Brookshire today, and then Adam Livingston hopefully is able to join. So hopefully a great Metaplanet Roundtable #2 next Tuesday. Ryan, love you, brother. Thanks for being here, man. Take care.
Thank you, sir. Thank you for having me, and it's great to be getting back into it.
Awesome. Good to hear. All right. Well, everyone, thank you for watching. Appreciate it. Again, none of it is financial advice, it's financial entertainment. If you like the entertainment, feel free to like and subscribe and share with someone that you think might need another high signal yet smile on their face. I think that's what we're trying to do here on that one. And then there's the Discord. I gotta get into that Discord, the Metaplanet Discord. All right. Thank you, everyone. Have a great day. Cheers.